Welcome to episode 12 of the Future Money Show with Crypto Moonboy. Thanks for coming on, Nick. We had a really good time talking with you, and this is probably my favorite podcast we've ever recorded. I had so much fun. We talked about lots of good things. We talked about DeFi. I got to learn a little bit more about that, as I'm a beginner in the DeFi space. We talked about Bitcoin being a shit coin. That's right. Bitcoin is a shit coin. No, I'm just playing. No, I'm just playing. Bitcoin might be a shitcoin. I don't know. Maybe you have to listen to this episode to see what we think about that. And lastly, we definitely talked about the current state of the bleeding market. Right, everybody's in pain right now. We had to talk about it, and because there's some real emotions going on. Without further ado, I really hope you enjoy this episode. Please leave comments below and make sure you hit the thumbs up button and subscribe. It really helps us out. Without further ado, enjoy the episode.
This is the Future Money Show.
I wanted to start this podcast by talking about what you just mentioned, the current state of the market. I just wanted to talk about what's been going on because I've been bleeding. Everybody's been bleeding. I feel like everybody has their own emotions and opinions on what's going on right now. So I'm really, really curious about yours and DQ's. I know DQ, we just released a market update video, but I want to hear what DQ's take is as well.
But I don't know, Nick being the guest. Nick being the guest.
Crypto Moonboy. Wow.
Welcome back.
Hey, thanks. Appreciate it. Hey guys, thanks for having me back. I appreciate hopping on here and chopping it up with the boys. But it's kind of wild because we're hearing a lot of crazy good news. Russia apparently has this reserve of $16 billion in crypto. Apparently they've been buying crypto for years, although they've been fighting it, saying they might ban it. India apparently just legalized crypto. There's a bill about not taxing staking. So earnings that are earned from staking, there's something about the IRS not going after those funds. A lot of cool stuff is happening in crypto. If you read crypto news and you follow what is going on in crypto and how these countries are interacting and adjusting, why isn't the market going up? There's a lot of cool stuff happening here. We're talking about Russia, and obviously we have El Salvador, who I think added another 140 Bitcoin about 2 weeks ago to their portfolio. There's just like Bitcoin. Why are we not mooning? So I think there's manipulation. There's manipulation in all markets. And I think I watched an episode of you guys talking about that. This guy here did talk about the stock market being manipulated. Crypto is manipulated. There is no reason why we should not be, at the very least, breaking over 55K. There's no way. There's too much good stuff going on. There's too much money in the market. There's people like me. There's people like us. There's new people who are average retail investors who are now in crypto. Every paycheck, $1,000, $500. Money is flooding into this market on a weekly basis. Why are we bleeding? Like, come on. We have Grayscale. They just added a new token to their assets. So they're still buying. They're still accumulating. Grayscale news is dropping. We have Michael Saylor, who added, I got to have these numbers before I start the podcast. No, I just bought like another 400 million Bitcoin, just like out of nowhere. I got 400 million sitting around. Let me gather the investors, bring the Avengers, let's buy more Bitcoin. Why are we bleeding?
So why do you think we're bleeding? If all this good news is coming out and there's good catalysts in the future and everything's happened, why do you think? What do you think the pain's been this month?
Manipulation, big money, hedge funds, people want to keep it down, the government. Look at the people are accumulating in the background. We're not going to hear about it now. In the coming weeks, we're going to hear about this person bought Bitcoin. BlackRock might have bought Bitcoin. It's like, when did this happen? Oh, they bought it during the bleed. But
of course. So
yes, if you wait and hear what's going to be coming in the coming weeks and coming months, this company acquired Bitcoin and this country now has Bitcoin. This person, this billionaire bought Bitcoin. It's like, so they all bought Bitcoin. They all entered positions and added to their bags during the bleed. And they just conveniently stayed that low until they were satisfied. They themselves must have some kind of puppetry going on to manipulate that. How? I don't know. But when you have billions of dollars, you have the ability to move it to the upside and the downside. So That's what I think.
I mean, especially if you think about some of these like altcoins that we invest in. I mean, their market caps are like in the 500 million to like 5 billion mark. So I mean, imagine you're investing $2 billion. Like, you'll move that thing like insane,
Dude,
You can control it exactly how you want.
A 2 billion buy on, let's say, Zilliqa? No, not well. Zilliqa is like worth two billion as is. That would be the entire thing. We can even use like BNB, bro. That is going to pump it.
Yeah.
Because although the crypto market cap is valued more than that investment, the amount of market share you now own is going to be a couple percent with that kind of percentage when it comes to buying 2 billion. You can move the market. So if someone were to have had 2 billion in Bitcoin when it was pumping to 64K, and they pull that out and they're slowly pulling that out, and there's multiple people, multiple hedge funds who are pulling. And as they pull, people like you and us who don't know what's going on, we're scared. It's going to go to zero and bear market. I better get my funds right now. That's what they want. They don't benefit from them selling. They benefit from the panic that comes after with the people like you and I, which is why hodling and holding is such a big thing in all the crypto spaces. Just hold, just chill.
Yeah, for sure. What do you think, DQ? What do you think's going on?
I agree with Nick a lot, to be honest. I just actually searched something up really quick because I did read something. So Russia owns 16% of all cryptocurrency, which is
really?
That's quite big.
I said 16 billion. Sorry, so it's actually 16% down.
What does Coinbase own? Doesn't Coinbase own like 30% or something like that?
Not of all of crypto, but I mean like crypto as a whole, like the whole entire market, like market cap, like whole entire market as a whole. Yeah. Russia owns 16%, but not only that. So they're fudding it and trying to ban it, but at the same time, a lot of people don't know this. Russia, when they announced that first ban, they weren't necessarily banning cryptocurrency. That's what the headlines were. But Russia owns patent protocols for certain projects within the crypto space. And a lot of people don't know that. I mean, feel free to guys do your own research and then you'll know which projects it is. But they own patent protocols for certain to basically build on certain crypto assets within the space, which is obviously going to help their economy thrive. The thing about Russia is that Russia wants to basically say fuck you to the US. There's no other way to put it. That's literally.
I think everyone wants to say that. Everyone wants to say fuck you to the US.
But I mean that's the case though. Like that's literally the case. In regards to where I think the market is going, Nick hit it on the head. I think there's a lot of market manipulation at play right now. I actually released that in my market update. The thing for February, if you're looking at historical data, over the course of the last 10 years, 8 out of the 10 years, February has been green. So it makes sense that we went into January with a nice monthly close. I don't think this is a reversal personally, but I think we're going to probably see a retrace in the market. We'll have a green month most likely in February, but I'm honestly scared for March. When the Fed meets again is what I'm afraid of.
Are you telling me to buy crypto for February? Are you telling me it's going to pump? Is that financial advice?
Never,
you
ever.
Just said it's going to pump. So I am a naive investor. I heard Daniel say we're going to have a green February. I'm about to buy crypto because Daniel said
no. Never financial advice. Never financial advice. I am saying, and me and Paul preach this, if you're going to take out a position, you need to make sure you dollar cost average your way into any position. And we do not chase green candles. Like how Paul's background is green, we do not chase green candles.
We ride the green candles. That's what
we ride them. Hey. We sell them. We sell them. We sell them, but we never, ever chase green candles because you will get left holding a bag.
We chase the red candles.
Did you hear that from my channel? I said that a lot. So I always say never buy a green, as well. Never buy a green candle. The worst investment you can make is buying a green candle. Why would you do that? There's going to be more red than green. Buy the red and just chill. The green is going to come. Why would you buy it when it's pumping? What's wrong with you?
FOMO's a
when
bitch.
Something's
FOMO
up 40%, why would you buy that? That's
FOMO's a bitch.
You clown.
But that's the influencer's fault. Bro, honestly, we talk.
That's my fault.
It's influence.
Yeah,
no, it's not yours.
That's your fault. You're telling me to buy February because February's gonna be green. That's your fault.
I'm not an influencer.
Yes, you are.
I'm not an influencer.
Channel. Yes, you are. Yeah, TikTok.
I'm just. I don't have TikTok. Paul has TikTok. I'm not. I
see you on TikTok.
Paul, that's all Paul. Shout out to Paul. Paul, honestly, I'm gonna give you your flowers right now. Paul is the best host, and he does a lot of work behind the scenes, guys. I owe a lot to I owe a lot to this guy. This is my brother, but I owe a lot of this to him because this wouldn't be possible without him. Honestly, he does a lot more than people understand. So shout out to my guy.
Thank you. Appreciate that.
But Nick also hit a point talking about holding crypto. Patience is the most important thing in the market. Your time will come. Just because you miss one opportunity does not mean you've missed out. There's tons of opportunity in the market. The space is young. Just need to be patient. So you'll be fine. So I guess this is, well, Paul, I actually want to hear what you think about the market right now.
Okay. So I have this theory I wanted to run by you guys. All right. So I have this theory that when most people believe we're at the bottom, we're not at the bottom.
No,
and when
I
most
agree with
people believe we still got room to drop, we're probably nearing a bottom. And why I think that is because when most people who invest are just schmucks, they're buffoons. They sell when they're scared and they buy when everything's, euphoric. So
of course,
my belief is that when things are dropping and everyone is scared, right? There's so much fear and they're like, and everybody's saying, no, there's going to be a recession. We haven't hit a bottom. It's going to drop more and more. That's when everybody sells. And when everybody who thinks there's still room to drop has sold already, right? And at least most of them, because most people are not great investors that know to hold, through these times. So the fact that most people think that we're still have room to grow, like I hear all the time in videos I watch or from people I talk to that, you need to be careful with investing, a recession could happen, inflation's high, the Fed is coming out in March, all these different things. And that just kind of points to me that we might be nearing a bottom. Like, I feel like there's so much fear right now that we might be near the bottom. And my thought is that, January has been one of the worst, months in stock market, or one of the worst starts to the year in decades. And I just see how I see this year going is ending in the stock market being like kind of a single digit growth year. Like if you look back on all the times where we've had periods of time where there's been high inflation and the Fed has been like in a rate cycle, like a rate hike cycle, like in the time we're kind of in right now, every time that's happened, or at least most of them, I don't know the numbers off the top of my head, I should, like you said, but it's been like the vast majority of cycles where that's been a case in the past, there's been a single digit growth year. So like we said, we've had a crazy drop and we're just going to see a recovery of the stock market until we see just a little bit of growth from where we dropped in January. And that's going to be this is my prediction, that's mostly going to be caused by like small cap stocks that have been hit the hardest in this drop. So they're going to be skyrocketing because they're getting down to what they're actually valued now from being overvalued. And crypto is also going to be the other avenue that people invest, this year. So I think crypto is going to have a big year. So that's kind of my.
See, I think I agree with your last point. When I think crypto this year, I think last year crypto was introduced into the mainstream. I think 22 and 23 are the years of adoption for crypto. That's what I believe. And by 25, you'll see like full like integration of crypto systems completed.
Is the reason you see that just because of how fast it's grown this year, or the past 2 years, I guess? Like it's so much bigger the last 2 years.
It's not just that though. Nick hit on the point. Basically, to follow the smart money, it's the smart money and where they're putting their money, the protocols that they're building on, the coins that they're trying to build stuff on. Like, okay, you have Walmart building on VeChain, you have central bank digital currencies building on Stellar's network. You have Grayscale picking up Algorand. Like those are all utility projects. These things are going to be integrated into the real world. And then you have the whole thing with the metaverse. That is the biggest thing like anyone could talk about right now. And what is that built on? Like the money you're going to use within the metaverse is built on cryptos. A lot of the applications that are going to be in the metaverse are cryptocurrency companies or built on cryptos. So and blockchain technology. So it definitely is the way it's going. And I mean, if you don't mind me segueing into this now, okay, look at the biggest wave right now. We have DeFi going on right now. And thankful we have Nick, because Nick is going to give us a little bit of a deep dive into DeFi. Nick, we talked about this off camera right before, but we saw that there was 120,000 Ethereum stolen through wormhole protocol, and that is the second biggest DeFi hack in history. What are your thoughts on that?
So yeah, based off the hacks, centralized or decentralized, it doesn't particularly matter. All markets and all smart contracts are subject to this kind of attack. I don't know when it comes to full security in crypto, if we do have something that's fully secured. I feel like as crypto advances, the methods that hackers use are also going to advance even further beyond. I watched a video that was insane. This guy hacked the ledger. He hacked it. It's blowing up on YouTube right now. It's about 10 days
really
old. Yes, you can look it up. I think there's a video where he said, I hacked a ledger for 2 million crypto. Watch it right now. It's blowing up. It's like 10 days old. It has like 500,000 views.
Watch that.
So he
Ledger better hire that guy.
Yo, so this guy, he bought Theta like 4 or 5 years ago. He forgot the passcode. He did not remember what the passcode was. So he hired this hacker to hack his ledger. And he spent 3 months testing other ledgers out on how can I break the code. It took him 3 months to figure out how to hack a cold wallet. Testing, failing, all these other functions and different types of data talking to each other. Nothing was breaking it. Boom, figured it out. He's like, this actually worked. Like, oh my God. So Jeez. He brought the guy with the actual ledger that held 2 million plus in Theta. He brought it. He tested it. It worked. The guy got his money. Boom. Hacked a cold wallet. So like I said, as crypto advances, the methods that we know to hack are also going to advance. So I'm not surprised that someone hacked that amount of Ethereum. That is a lot, quite a bit for sure.
I feel like it's a constant game. Like the technology is going to get better to hack. And the technology to protect yourself against hacking is also going to get better. It's a constant battle.
Hold on. I don't mean to interrupt anyone at all. Obviously, sorry, but it was a Trezor, not a ledger.
Trezor, okay, same thing.
Still, so no. It's not the same. It's not the same.
He's like, I don't have a Trezor.
No. The reason why I own both. Mm-hmm. And Ledger's setup is a little bit different than how a Trezor is set up. Now, I'm like skimming through to see exactly what they did, but the setup is a little bit different.
It's interesting though that that's crazy that someone was able to do that.
Yeah. So what he actually did is that he opened it and he took the chip. He attached the chip to his computer and he had the computer run sequences of numbers for 3 hours straight until they figured out what that code was to crack it. All of the memory is stored within the RAM on the Ledger Trezor. So that whole time of 3 hours, the computer just doing coding numbers, trying to figure out what the number was to hack into it to get the passcode to give to the guy so he can access the crypto. So it's all in the RAM. In that whole process of 3 hours, he was waiting for the computer to, finish the journey. It was a great watch. I think it's like a 30-minute video, but I watched the entire thing. It was a fun time, man.
Honestly,
just give you some insight.
Oh, go ahead.
My question is, was it his keys or just his password? Because that makes the difference. Okay, so that makes the difference. That makes the difference there. You know what I mean?
Yeah, did not show the keys.
Yeah, because you still have to be able to sign whatever transaction with on the device and stuff like that.
I see what you're saying. So he was able to get into the account, but if he wanted to send money somewhere, he would have needed the key, right?
Well, he if you watch the video, he said he could have pulled it off because he said once the computer figures out the sequences of numbers, everything that is stored on that cold wallet is now in his hard drive on the computer. I don't know what that means that he can now transfer the crypto over. I don't know in detail.
Or maybe he can figure out the key or something.
But he hacked it for the guy so he can get his passcode. His job was done. What he would have found if he went further, I don't know. But it was incredible to see what he did.
Yeah.
So I'm not saying that it's impossible. I mean, it's very interesting.
I'm glad that people like him are what keep Ledger secure.
100%. The reason why I brought this up is because we had a guy comment on one of our videos saying that quantum computing will destroy a lot of these hardware wallet companies, which is a fact. And the fact that you brought up the coding, that's what made me think about it, because that is very true. Because no one's going to be able to stop a quantum computer from figuring out any sort of number sequence or keys or anything like that, because it's way far advanced past anything. Now, the only reason why I was saying, that's why I was asking between if it was a ledger, because ledgers don't store your keys at all. So that's why I was just curious to know. But but it's good. That video is gonna put to test so many hardware wallet companies. Like Trezor is probably gonna come under fire very soon.
Not only that, their product is gonna get better. Like that's why it's a good thing.
Yeah, exactly.
It's just gonna get better. It's not an actual hacker, who's like able to do that and is trying to cause harm.
No, exactly.
It's someone who did it and posted a video about how he did it on YouTube. So everything's just gonna get better from that.
Definitely. By the way, guys, we're not saying not to get a ledger. Not to get a ledger. It's still the safest way to store your crypto. So
affiliate link in our channel.
Yeah, affiliate link in the channel. Make sure you do that. Get that.
You tried to transition to DeFi. Let's transition now. I have been telling DQ I want to learn more about DeFi. I don't know a ton about it. I know very basic understanding. What you'd imagine someone who knows what crypto is and who just knows about DeFi, but I don't know too much about it. I guess I just know that there's a lot higher APYs able to be made, and that you're basically allowing your crypto to be lent out to other people. But I have a very basic understanding. So I was hoping that maybe you could. I don't know if you know a ton about DeFi, but hopefully you could maybe give a description of what it is, and what the environment, the DeFi environment is, to maybe all of our listeners and me who don't know what it really is.
Yeah, for sure. I think DeFi is a very rough thing to explain, because when you try to talk about the concept, it's very difficult to put into words. You are essentially your own bank. You are no longer trying to worry about your savings account or checkings account. Picture your money, the money that you have in your bank account right now, on a crypto. Consider that your bank and consider that your savings account. So we can look at, let's say, a DAO. I don't think you should buy a DAO, but let's say a DAO. You put your money in a DAO and
time.
Did you know about time?
Yeah.
Yes,
yeah.
I do know about time. Rug, baby. Rug, baby. It ran out of time. Time ran out of time.
I mean, we can talk a little bit about time if you want to. That is a wild conversation, but you are essentially taking control of your funds. That's what DeFi gives you opportunity to do. It is decentralized finance. You are in control of your own finances. So what are the opportunities in DeFi? Lending. You can lend your crypto for a higher percent. Borrowing. You can borrow crypto and use your crypto as collateral. High APYs, like you just said, 1% daily returns. I have 1% daily return plays, and they're saving me in this bear market. They're paying my bills in this bear market. There's tokens out there that you can put your money, your assets in, that can have you make money via locking up, via staking, via interacting with the protocol. It is, for the most part, a way to make money regardless of whatever the market does. You don't care about bull runs. You don't care about bear market. That's irrelevant. These protocols, they're not guaranteeing USD dollars. They're guaranteeing either a fixed APY, either a variable APY, either a percent on your lending, or something that's going to give you interest. Big thing about DeFi is interest. All this 1%, all this borrowing, lending, it is you earning interest, you borrowing interest, you taking someone else's crypto, and they're going to get interest off of you. A lot of it is interest-based stuff here. I think it's incredible. I love DeFi. I'm a DeFi degen. I am forever in the DeFi space. And as I am here looking on the crypto market with my long-term plays, they're locked up. I don't care about those. I'm in the DeFi space because I want to make money right now today. I have bills. I have rent. I want to buy food. I want to eat steak every day. How am I going to do that? DeFi. Like I said, it is risky. I'm not going to paint a picture of money and Lambos for people. We're not going to do that. We're going to be very honest about there's risk involved, but just like anything else, it takes wanting to be a little risky in order to potentially make some good returns. I'm not going to talk.
Let me ask you this. I have a question. I'm first started investing in the stock market. My brain just defaults to it.
Yeah.
It seems like it's a way to, it's a income producing crypto, just like a dividend stock might be.
Mm-hmm.
And the thing about the stock market and dividend stocks is that when you invest in a dividend stock, it's generally a safer blue chip company that will pay you income. So it's not risky. That's why you put it there. Versus if putting it in, if investing in some DeFi projects that give you high yields is more risky, like why would you do it? You know
It
what
is
I'm trying
only
to say?
risky because it's new. Crypto is risky because
Exactly.
the stock market has had over 100 years of proving itself. Crypto has been around for 12.
Yeah.
DeFi has been around for what, 4? It's just the fact that it's new. It hasn't been around long enough to capture the confidence of big money. That's the only thing that makes it risky. That is it.
I agree.
Does it make you money? Yes. Does it outperform the stock market? Easy. Can you kill it? Every single day. Is there risk? Just like anything else, there's risk, and there's more risk over here because of the lack of understanding, the lack of adoption. This is what crypto is. It's very difficult to look at the stock market and plug those numbers into crypto because crypto is 1,000 times more, and it's sustainable if you look at what these protocols are doing and how they function. Not time. If you look at how most of them are functioning. Sorry.
Let me jump in real quick. And then, sorry, not to cut you off or anything like that. See, Nick brings up a very valid point. Now, the stock market has over 100 years of proving itself. I'm pretty sure in the infancy of the stock market, there was a lot of scams going on. But the thing about the crypto space is you have so much within the crypto space that people do not know. DeFi is only become relevant to people now, like Nick said, but all these projects are new. Now, the thing is, because there's no regulations in this space, a lot of these projects that put out their roadmaps, just because they put out a roadmap doesn't necessarily mean that they'll be able to pull it off. Time being an example. But for example, like in DeFi, running nodes makes you a ton of money.
Money.
Explain it.
So you have things that so there's Strong Block, for example, that Nick has brought up in our last video. So that is Node as a service. Am I right, Nick?
Yep, Node as a service. Yeah.
So Node as a service, right? And for example, it takes 10 strong tokens to form one strong node, and you get a daily reward that you have to claim every single day. So you have to be active within the DeFi space. Like for example, you have power nodes, you have Thor nodes. Those kind of
Comb Financial. There's a lot of them
and they're big. You got Phoenix Fire. Like those things are massive. And like I said,
is the node is the job is your job as a node to just verify transactions?
So what a node does, a node validates transactions on the blockchain, which makes the blockchain more efficient for speed. They are very helpful. It's not like you're strong. When you have 10 tokens and you buy a node, you lose that 10 tokens. It's gone. You're making a purchase, right?
Oh.
You now own a node. The tokens are gone. You own a node. You are earning the 0.092 strong per day. Based off of strong current prices, I think per node you're earning about $43 per day.
It's like 111 days before you get your ROI. And
I was about to ask
ROI,
109 days?
ROI is subjective to price though. It's subjective to price because you have some projects like Thor, for example, will give you if you have an Odin, right? An Odin node will give you your ROI in 45 days.
Yeah, just like Comb. So Comb has four different tiers of nodes. The fourth tier is heavy, but you get your investment back in like 30 days, but it's a very high investment. Like I think it's like 60 Comb nodes. One Comb is like $300. Like I'm not buying that. That's heavy, right?
No, of course not.
I might as well buy Gala, like a Gala node or something at that point.
Is that? But you can't just buy nodes for any crypto, I'd assume.
Let me finish my point.
Yeah.
So when it comes to nodes, like you don't want to build a node, for example, on Ethereum's blockchain because you have to pay gas fees. But you'd want to build something on an upcoming network like FTM or on AVAX. That's where you would want to put your nodes. Or Polygon. Those three is where you would want to put your nodes on because the fees are less, but they're also up and coming.
Yeah.
Solana as well. So the thing about it is like we were saying earlier is your ROI is dependent on price of the coin. So obviously if the price of the coin goes down, your ROI will take longer to get. However, you're still getting these daily rewards. Now, the thing about these companies trying to make themselves sustainable is they have to cut reward schemes down a little bit periodically just in order to keep their company like sustainable. Because you have some people that like Time, for example, their APY wasn't sustainable. And you have some other places that have cut their APY like Hector DAO. Hector DAO cut their APY from 10,000% down to 500% because it wasn't sustainable. Obviously, that caused the price to tank, but they're trying to build a sustainable model. So I mean, that's how it works. But the higher the price goes, like if you get in at, say for example, when I built my first Strong node, I got into Strong when Strong was like $150. So I spent $1,500 to get my first Strong node, right? And like right now to build a Strong node, bro,
what's wrong? You didn't say, hey Nick, buy a node.
To build
that for 50 per token.
To purchase a Strong node right now, it's about $6,000 roughly to get a Strong node done right now. But yeah, sorry, not to cut you off, Paul. I was just giving a little bit more context to how it works.
Yeah. So So just to finish off the whole DeFi conversation, yes, it is risky, and it is not much different than anything in crypto space. But since DeFi itself is relatively new, there's a bit more risk there because we don't know what these things can do in the very long term. But this are early times. We're early adopters. I can put a little bit of money here. I can put a little money over there. If it pops off massively, then I'm living large. I am. The stock market is not going to give me those returns anytime soon. It's not going to happen. But crypto being so new, it just takes 2 or 3 proper hedge funds to look at it and say, wow, I'm going to ape in. And then boom. But the big difficulty is which ones do you put your money into? That is the biggest risk. Some of these projects are very safe because they have VeChain, safe. I love Zilliqa, safe. XRP going through his lawsuit, but it's a great project. Safe. Like safe. Those coins are in the crypto space, but we know what they've done. They have price history. We know what they want to do. We know where they want to go. And there's no reason why they're not going to be the backbone of crypto for the next 5, 10, 15 years. They are powerful powerhouses in this space. It's all about which project you pick, which is why you diversify. I have about 7 of these different passive income DeFi projects. If 5 fail, 2's going to back me up. I just need the 2 to take me to the moon. And maybe none does, but that's the game here, right? We hope that the play we make is the play to take us to the moon, to create financial wealth. But yeah, I love DeFi.
Like DQ, I like to add on what you're saying.
Oh, get out of here, X. Bro, is that an X or what's that? That's like 2 C's.
I was trying to read that for a sec. That's an ugly X.
XRP to the moon.
Fake moon to the moon. Get out of here.
All right, stellar to the
moon. Bro, I hold both.
How much safe one do you have? How much safe one do you have?
Me? I have a little bit.
I was just gonna say, DQ is saying, your payback period depends on, the price of the coin, and if it's depreciating, it might cost more. But just in the same way, I was just gonna add that if the price is mooning, your payback period would be really small, right?
Yeah, it'll be shorter. It'll be a lot shorter.
So in the same way, you could have a very small payback period.
Like, I'll give you an example. If you pull up the Thor chart, I mean, you could probably edit the Thor chart in here. So basically with Thor, when it first launched, its ROI was predicted to be 35 days to get your money back. And then it went stupid. And then people were getting their ROI in like 10 days.
Yeah. They had to cut their rewards. That was like 50% per month.
Yeah, they had to cut it because it exploded like crazy. Like Phoenix Fire as well. Phoenix came out at $150 per token. So you need 10 of them to obviously build a nest. But Phoenix is somewhere like, I want to say like around the 500, 600 region right now. And Phoenix has only been out for, I think, a little bit over a month.
See, like, I don't like these strong forks. I'm just going to call them forks of strong. All I have is strong. I know about Thor. I know about Cone Financial. I know about all these coins. I don't have the confidence to invest because they are trying to build off of what Strong has already established in the market. They are the node for service. They already want to branch off to other blockchains. They're already offering nodes on Polygon. They're going to go on Phantom. They're most likely going to potentially go on Binance one day. They're going to build their own chain as well. They are going to be the big daddy in the node per service space. Why would I buy the other ones?
I'll tell you why. I'll tell you why. I'll tell you exactly why. You're right. Just like how when people come into the crypto space and they look at Bitcoin, they say, what else should I buy besides Bitcoin? You're right. Strong is the daddy of the node space. However, You need to look at what's going to be your Ethereum, what's going to be your Cardano, what's going to be your other things, because Strong is not going to be the only DeFi project that survives.
Yep.
You know what I mean? So some of these guys, and like you said, we're early adopters. So we're early adopters adopting early within another aspect of the crypto space.
Yeah.
So we're early adopters. You know what I mean? So I mean that's the thing, and I guess that's why obviously some of these protocols are going to fall off, just like how in the last bull run you have some projects that never made it out, like they just flopped or whatever. But it's the same thing in the DeFi space. You have some projects that will stick around. Like it's not just going to be Strong that'll be the only nodes as a surface, and not everyone can afford to spend 70 grand on a Gala node. So it's like you're definitely going to have your top 10 kind of, or top 5 kind of DeFi nodes as a service projects for sure. It's just finding which ones is going to be sustainable or not. Yeah,
and that's just, I mean, like we're just talking about a handful. I mean, you have Flux nodes, you have pre-search. Do you know pre-search?
Pre-search is top tier, but it's really hard to get, like the node to build a pre-search node is very extensive and it's very complex. It's not easy.
Yeah, for sure. And the return on that right now is very small because token is just a couple cents per coin. But I see pre-search being a $2 to $5 coin easy one day, right? At that point, man, those nodes that you bought at these prices are worth a lot of money. So that's what we're talking about. I mean, some tokens right now, which if you do buy a node for, they're not going to pay these high 100-day return. They're not give you money back that fast, right? They're going to be a lot slower. But that's, like Daniel said, based off of the price per coin, because you're earning tokens for hosting these nodes. That's your reward for owning a node right now. So it all depends on the price per coin. So if you have a coin like pre-search that's 30 cents right now, I think it takes 1,000 coins to make one node, as well as $300, I believe. So $300 per node. Give it a couple of years, it goes to $5. Now it's what, five grand per node? It's like, come on, it's very, very valuable at that point. So yeah, look at that as well.
Exactly. You can make yourself like 10 nodes and sit on it for a little while, and then you're building up rewards, obviously. And then by the time that price action happens for pre-search, it's like you're printing money. Because I think a lot of these places you can have up to 100 nodes, and some of them don't even have limits on what you can have. Like Strong, you can only have 100, but
you could just create like a second wallet and just start building more nodes that way.
Exactly.
But the thing I like about pre-search is that unlike these other nodes, you don't lose your tokens. You keep
facts.
So pre-search is nice because let's say you own a node, you're earning passive income off the node. If the token goes up to $10, you can literally get your tokens back and sell it. And then that's money right there. You still have 9 nodes on the side. So I like pre-search quite a bit. Look into them if you want to.
Yeah, definitely do that.
Not financial advice.
Yeah, what happened with time? Like what?
Daniel, do you want to go or you want me to go?
Nah, you go ahead, bro. You got it. You got it.
So I've been looking at time for a long time. No pun intended, right? Because I like the project. It was very interesting. We have Daniel Sesta, who's a CEO of Time, doing AMAs, talking about the protocol and how these APYs is going to be sustainable and how they want to bring other projects within the Time ecosystem to have this big, almost, thing of projects going around. Like they want to bring Popsicle Finance and Abracadabra Money. Abracadabra will be the lending protocol where you can take the money loan to go back into Time to leverage your position higher to earn more. And that's just going to continue. And then it is a really cool idea when it comes to the ecosystem. What happened to Time? So news came out about I think the COO, which is a guy who was managing the treasury. Daniel Sessa, the CEO, he was doxxed. The guy was out there, public name, face, Instagram, on beach with his girl. You can see him. This other guy, his name was Sifu, and he had the avatar from the panda movie. What is it? The fighting panda?
Kung Fu Panda.
Kung Fu Panda. So that
Sifu.
Yeah, Sifu.
Sifu was a foo.
Yeah, so the actual Sifu avatar. So we don't know who he is. He was on docs, but he was managing a treasury. This treasury had $800 million just sitting there, right? Instead of a liquidity pool, they have a treasury, okay? This guy got on docs. They figured out who he was. This guy has a history of crime, corruption, fraud, manipulation, and he's been to jail. All those things came out. This guy is managing the time treasury.
He dropped the soap.
He dropped 10 soaps. I will say
dropped 10 soaps.
This guy, so he actually was the he was the owner of a one of these exchanges quite a few years ago back in Canada. So it was a registered exchange. It was in Canada. I don't remember the name of it, but that exchange, it got hit for some kind of fraud when it comes to money laundering. They were taking funds that were in crypto, putting it through the exchange, and they did something to get USDT out of it. Did that for years. They got found out about. That guy went to jail. The other guy apparently died. People were saying that he just faked his own death. He's still out there with all the money. I don't know what happened there. This is the same guy that's running the time that has the time treasury to manage for the most part. So when that news came out, the price tanked. People sold, it dumped. It went from $900 per token to $200 in like 5 minutes. Everyone who was leveraging got liquidated. Massive cascade of liquidations. People had like leverage on $100,000, $500,000, $2 million. Boom, liquidated money gone. So time, that news, it killed it. Now there's news coming out about, okay, well, should we wind down the company? Because now this news came out. We look really bad over here. The guy, Daniel Sesta, knew that this guy was a fraudster. He knew this. He said it on a tweet, and he still let him manage the treasury. Why would you do that? It would be different if you just found out later the rest of us, but you knew this the whole time.
Well, that's the thing. I read his tweet, right? And when I deciphered the tweet, he was like, no one should be judged on their past. Now, don't get me wrong. You're managing money and you went to jail for fraud. That's a no-no. That's like, if I was a doctor and I was someone that succumbed to malpractice, for example, do you really think that I'm going to trust you to operate or do anything within your practice ever again? If I was a cop and I shot somebody or something like that, and it wasn't within my legal right, you really think you're gonna trust me? Like, it's that was just bad very, very, very bad judgment on Daniel's part. That was
how many crypto projects are behind the scenes like this,
well,
this one got leaked. How many of them are actually like that?
But it depends, though, because you're talking DeFi. DeFi is completely different because DeFi is newer within the crypto space now. There's a lot of projects. That's the thing, and that's when we say do your own research. Right? It comes down to your research. You need to research the teams of the projects that you're buying into. Most blue chip projects are completely doxed, and you know everyone that's on the team. It's important that you know who's behind the projects because DeFi projects are newer within the crypto space. It's a lot different than blue chips because when you go to blue chips, you have your Cardano, who's behind it. Stellar, is Jed McCaleb. XRP, is Brad Garlinghouse. Exactly who's behind these big blue chip projects. But when it comes to DAOs and nodes, for example, it's the devs that are in these discords that you see, you speak to a lot, but these guys are hiding behind avatars. They're not necessarily in the light as much as these other blue chip crypto companies are. And because they're so new, they don't have the partnerships that these other companies have as well, or the finance, the background that these other guys have. So it's a lot easier for that stuff to be skirted under the rug, if you get what I'm trying to say.
I have a rebuttal to that. So
go ahead, boss.
I understand what you're saying, and I like docs teams. But if you think about it, it goes against what crypto was intended for. Decentralization. It was intended to be anonymous. I like dogs teams. I need a dogs team to invest. I like that, right? But if we want to honor what crypto is supposed to be, everyone's anonymous, decentralized. No one is governed by anyone. Okay. The holders are, for the most part, the owners of the protocol. And they obviously are the ones that are going to dictate the price and whatever else. But the devs will work. I feel like crypto is going to have to be regulated. Yes, we're going to have to go in the space of where we want mass adoption. Therefore, docs and KYC documentation is most likely going to be required. But now we're in a field where crypto is going to be centralized and decentralized. It's going to be two things at once.
Yeah, but the thing about these projects are, I appreciate the rebuttal, and 100% everyone wants decentralization because they want to say, okay, the government shouldn't have control over this. But at the end of the day, these guys still have the ability to rug you, and you don't have any control over that. You know what I mean? So it's not 100% decentralized because someone else is still in control of the project. You're not 100% in control of it. So me personally, I would like to know the people behind the things that I'm investing in, because I don't have control over certain things within that space. You know what I mean?
You ever seen a Doc's team rug pull?
I mean, yes, but yes,
it doesn't matter.
Yeah, it doesn't matter, but it's less likely to happen.
Audits in these docs, because when you look at an audit, right? What does an audit do? An audit verifies that the functions of the contract function.
No, 100%.
It doesn't do anything. An audit doesn't mean that it's not a honeypot, not
100%. But which one is less likely to happen, though? The thing is, right? For example, I know you, right? I know you to or whatever. I know your project and all that kind of stuff. You're less likely to rug me than someone that I don't know. Like, say I didn't know Paul or anything like that. Paul could rug me and I would have no idea about anything like that. But however, I can run to socials if I know the Docs team. I mean, I could send bricks and throw eggs at his house and until he gives me my money back. But it's a lot harder to get away with that if you're doxxed, because you would never be able to surface again and run another project.
So you're saying if I come up with a Moonboy coin, you're gonna buy it. You're gonna buy my coin. You're gonna support
it.
Yeah, I will. 100%.
You're gonna put 10 grand on me day one. You're gonna 10 grand at the pre-sale.
I don't have 10 grand to spend, but yes.
I am doxxed. You know me. You trust me. You're gonna buy my coin, right?
I'm gonna buy me some crypto Moonboy. That's what I'm gonna buy.
Crypto Moonboy coins.
If it's built on SafeMoon, I don't want it. If it's built on SafeMoon,
I'm gonna build my I'm gonna build my coin on SafeMoon blockchain for sure. You better support that. There's a lot of these people who rug pull that they say they didn't have the intentions to rug pull, but it turned out to be a rug pull. You know, like when you have someone to start a project with the idea of, oh man, we're gonna do a charity and we're gonna build these games, but then people really start supporting it, and now the LP has $5 million, and it's like, I didn't expect this, so I could take that. I could take that 5 million right now. It's like it changes people. It really changes people, right? So it's very.
I agree. Yeah. I agree. When it comes to money, money changes people, but it depends on what kind of person you are. Obviously, I'm not saying that. I'm
a great person. I'm a Moonboy coin.
No. I agree with you 110,000%. But what I'm saying is, once you're a docs team, you put yourself in that public light.
Yeah,
you know what I mean.
Right.
And if you do honeypot someone, you will never ever get that chance to repeat that ever again. Versus someone that's undoxed and you don't know, they can run that process 50 million times and you'd never know who's behind it.
Right.
But that's the only difference I'm saying. Like it would be like a one and done thing. So if you were to ever do that, make sure you get like at least 50 million out of it, so you don't have.
I was about to say, bro, if you had 500 million sitting, 100 million. Let's say you had $100 million just sitting there. Would you rug pull everyone?
No, I wouldn't, because
I might.
But no, check.
$100 million.
Half of it, yeah.
But check this out though. All right, you telling me, right? You just
fuck everyone else.
No. But you just talked about a guy, right? That you said that hacked a Trezor, for example. And you know how sophisticated hacks are these days. You really mean to tell me that if you were to rug pull someone, you don't think that if you did it to the wrong person, someone got pissed off enough, you don't think that they'd be able to find out exactly where you are and destroy your whole entire life?
And the thing about a rug pull is that it's you really can't get away with it. Like everything's on a blockchain. Most likely that person's going to try to get their rug pull funds on an exchange that takes KYC documentation.
They're going to track every.
They're going to track you, and you are going to be linked to an account that has your information. It happens all the time.
But that's what I'm saying. That's what I'm saying.
Yeah.
But that's what I'm saying. If there's someone that is like, driven enough, or if you basically fuck somebody over enough, there's no like lengths that they're not willing to go to find that. But what I'm saying is, right, like people will go to absolute lengths to make sure. Like, for example, have you ever tracked a transaction that you feel like it's taking too long? Like me, one time I went on Etherscan, right? And I just looked through the history of my transactions. I put one like transaction basically through 5 different exchanges, and you can see from the start point and to the end point. And it's really not that hard, like you said. It's gonna go on a KYC'd exchange at some point. People will go to the lengths to find out who that person is. It's not hard to hack into these systems. We have hacks every single day. Like, I'm not capable of doing it, but someone out there is. So
let alone the government.
But that's what I'm saying. So if you were to rug pull me for $100 million, of course I'm gonna go out of my way to find where you are and who you are. What are you gonna do then?
Yeah, no, you're right. Yeah, let alone the government. It's gonna be highly illegal.
It won't even be on jail. Yeah, like. But that's the thing. Like, that's the thing that people forget about blockchain. Like, everything is literally traceable. When the moment you put it online, it'll never go away.
Is there anything else you guys want to talk about?
I want to hear what Nick has to say. Tell me something interesting, Nick.
Got anything that's been on your mind?
Yes. So I've just been looking on the market for opportunities when it comes to passive income. I've been very bullish on passive income because what I say on my channel is that I have bags. I have like different bags in portfolio positions for different things. I have my 3 to 5 year bags. I have my potential tomorrow moonshots, and then I have my passive income plays. The strong nose, and then the other coins I do have. So I've been on the market looking for these tokens, right? Trying to find the next opportunity that can add to my position. Because for me, I have a goal of $1,000 a day. Not far, not close. I want to get there though, and I feel like crypto can do that. And if you can build that big enough to where you have such a large position in the market, you will most likely survive a bear market. Now, this is a really cool concept here, and you guys brought this up in the beginning. I'm going to bring it back over here. The concept of 2022 and 2023 and 2024 will all be great years in crypto. That's what Daniel said. Have you realized that we're going against the traditional patterns of a bear market? It should have ended last year. Based off of historical data when it comes to cryptocurrency, we have
should have been a blow off top in December.
Yeah, we have a 1.5 year massive hype cycle, and then we have a 3-year cool off, the bear market, and then Bitcoin having crypto blows up, and then boom, bear market. It never fails. This time is different because last year was supposed to be our 1.5 year cycle. Why are we in January, now February, talking about February is going to be a green month and we're going to go back up? We are now what I would consider, and what a lot of people consider, be the crypto super cycle. And it's happened with the stock market. Stock market in the beginning was very volatile like crypto. It had its bull runs and bear markets to the point now where its stock market bull run is up to 8 years. 8 years of consistent green in the stock market. You're going to have months and periods within that 8 years where it's down, but for the most part, an 8-year trajectory based off of what people have analyzed on the market. Crypto looks to be leading in that way, because we are just now going into what will be a 2-year bull run, because we're talking about going back up in February, and then March is going to be bearish, and then boom, all-time highs, and people make a lot of money and retire and pay off debt. So, and yeah, based off of Bitcoin's next halving as well, I believe the next halving is in 2024, 2023. And that's going to trigger another massive super cycle. So it looks like we're going to kind of be almost going up and down, up and down, up and down, but kind of more so up and down for the next 1.5 years because of all the adoption, the stuff we're hearing about Russia, the stuff we're hearing about these bills, and how staking profits are not going to be taxed by the IRS. All this is going to make crypto overall more bullish. A lot of people who are little guys like us are going to jump into it. There's no way it's going to go down, in my opinion, for the next couple months or years. So we're going to lead into another historical bull run, but we are technically not in a bear market. What does that look like? We're just going to explode.
Let me ask you. So just for the viewers' sake, when you say we're not going to go down, you mean that like on a macro perspective, right? Like overall view of the market, we're not going to go all the way down. We're like, I'm just saying, like, we're not going to go back down and test like low lows. We're going to be setting higher lows, basically. Overall momentum will be bullish, not bearish.
Yeah, I mean, every single crypto bull run, Bitcoin had it's had a pullback between 70 and 80%. I don't think we're going to see 90% pullback of Bitcoin ever again. My opinion, we're never going to see 80%, maybe 70, but at this current point in time, there's no indicators in regards to Bitcoin's going to go down that low.
I'm putting that on a chart right now. I want to see.
Go ahead, drop it by 70%. What does 70% look like from the all-time high? That's why I want down about 50, right?
That's
or we're down by like 42%.
That's like 20, high 20s, mid high 20s.
I have Bitcoin, and I told Paul this. I have Bitcoin going back down to test that 10 to 13 region. I'm not
10
gonna lie
to 13.
No
that's
way.
like
No
over
way.
80. That's like 80.
No way.
I mean,
it's not gonna happen.
Yeah, all right. Again, like my opinion. Feel free, like that's cool. But I was also the same person that has been saying for 3-4 months now that Bitcoin wasn't going to 100K, and everyone telling me I was full of shit. Turns out I was right. So I mean, let's be honest here. How many times did I tell you that? I said to both of you, actually. I said I don't think Bitcoin is going to reach 100K in this cycle. Everyone was saying Bitcoin 100K by December, 250 by December, 1 million by December, and we're in February, and Bitcoin's top is still 69,000, which was set back in November.
As well, yeah. I never said 100K Bitcoin. I was thinking maybe 80, 82. There's no way, Daniel. I think that Bitcoin gets to 10K.
I said 10 to 13. I didn't say.
There's
I
no
said 10
way
to
it
13.
gets
I feel like
because
go ahead.
13 is 80%, by the way.
13 is 80%.
There's so much money
13 is
involved.
80%.
We're having governments, countries, hedge funds, big money, the Michael Saylors of the world, the Grayscales, El Salvador. They are trying to acquire as much Bitcoin as possible, and they're buying it by the hundreds and hundreds per transaction. There is they would have to sell.
But Bitcoin's not sustainable. But Bitcoin's not sustainable, and that's the thing.
Bitcoin's backed by the people. Bitcoin's backed by the holders.
Okay, but you're going to agree with me when I say this, right? Because this affects the projects that you believe in. You came on here last time and talked about SafeMoon being a sustainable coin, right? Every single government in the world right now is preaching about EPA laws, and they're talking about climate change and being green. Bitcoin is not a green currency. Ethereum is not a green currency until they switch over to proof of stake. They're still proof of work. So when you're talking about adoption, all the coins that are on the World Economic Forum list, Bitcoin's not listed there. The coins that are listed by the IMF, not listed there. All the CBDCs have not mentioned Bitcoin, not once. They're all targeting green currencies. Every single one of them.
That's bullish. That's bullish.
No,
bro.
it is. It is
bullish.
No, but let me finish. So it is bullish. But when adoption comes, none of them had mentioned Bitcoin. So none of them are going to be built on Bitcoin. Bitcoin is a store of value. And I appreciate what Bitcoin has done for the space. But in regards to application, Bitcoin's a shitcoin. I'm sorry.
You've been quite against Bitcoin since the beginning. You want to explain that?
Yeah, because tell me what the actual use case is for Bitcoin. Besides
Bitcoin does what it's supposed to do, store of value. It's horrible transactions. It's horrible as a peer-to-peer payment system. What is it supposed to do? It does what it's supposed to do with the store of value. Bitcoin is not going to drop because these big hedge funds and big money is not going to sell like a regular retail investor. They're in Bitcoin for the eventual 5, 10, 15, 20, 25 years. They're building trust funds off of Bitcoin. I don't see these people selling. We're going to sell, and it's going to go as low as we have the ability to crash it.
Let me add to
but
what
it has a very powerful floor.
Yeah, let me add exactly what you're saying, because I was waiting to say exactly what you're saying right now. What percentage of retail investors do you think are actually in Bitcoin? It's not that much. Like compared to the institutional portion of how much Bitcoin is owned versus like the retail, it can't be that much. So the fact that if all of the retail investors just sold, I still think the bottom of that is way higher than 13K. Like if all the institutions are still holding, and even if some of them sold, there's no way 80% of Bitcoin's market cap goes away, because I think, institutions hold more than 20%. And the energy thing, like you said, you've told me before that Bitcoin takes up such little energy of the whole. Yes, it's not green, but
I didn't say it takes a little energy. I said it takes up a lot of energy. It takes up 2% of the world's energy, bro. That's a lot.
That's not a lot.
Yes, it is. For a currency? What are you talking about? 2% of the world's energy? That's a lot of bro. You have to think about this. Some countries don't even take up that much percentage.
If Bitcoin's market cap went up like a ton, does the energy uses go up a ton?
Yes, because you're more validating more transactions.
That's true.
So here's the argument, though. With that being the case, government
and retail investors
are still hoarding Bitcoin. They don't.
Okay.
Do they care? They don't give a shit. They want to paint that political narrative because it sounds great. Why are they buying? Why are they supporting? Because it is a future of store value.
All I'm gonna say to you guys, Bitcoin is a lot closer to 13K than it is to 100. That's all I'm gonna say. I'm just gonna say that. I literally watched Bitcoin drop off 55% in a month, bro. I'm just telling you what I see. It's what I believe. I'm not saying I'm right, but
Daniel, bro,
you can't tell me it can't be charted.
You are in hot waters, my boy. You call Bitcoin a shitcoin.
It is a shitcoin.
Deep.
I think we found the title of our episode.
That is not my narrative, guys.
No, because we're not gonna get any views if you put that on there. So don't do that.
No, you're gonna get mad views. That's very controversial. You better put that. You better
repost this.
Maybe we should name it Crypto Moonboy Coin.
Oh my god!
I have my first investor down here. He says he's gonna drop 10 grand. It's gonna be awesome.
You better repost that. But anyways,
you're gonna sell your XRP.
Hell no. But anyways, the thing about Bitcoin is, like I said, and I've said public like many times in our videos, I appreciate what it's done for the space and the branding purposes of it, because whenever people think about crypto, they think about Bitcoin, and then secondly they think about Ethereum. Like, you hear it with all the politicians that don't know anything about crypto. This is the Bitcoins. And then when you go and talk to like other people, they say they think Bitcoin is a whole entire cryptocurrency space. You know what I mean? Like a lot of websites that you go on, they have the Bitcoin coin as their thing, or they have Ethereum because it's very good to draw people in. Now, for that purpose and that purpose alone, it brings value to it in regards to application and what it can actually do. It's not worth more than the shit I leave in the toilet. All right.
Okay.
But we can save that for a hot take. We could cut that out. We ain't
cutting that out. No. I am an independent participant of this podcast. I do not condone with what's being said. Hands up, don't shoot. That's what I'm saying. Yo.
My only thing is because I love utility so much, and because you can see the actual. You are a safe moon maxi. Let's just put it out there. But you love you're a safe moon maxi. All your videos are safe moon. I'm not. Don't even go there. You're a safe moon maxi. But the thing about it is, you know that you believe that your project is sustainable, right? So your project has some real world applications, some real world use case, and the projects that I believe in have the same, because it makes sense. That's all I'm saying. And by the way, I'm just gonna make this prediction in this video. Thank God there's timestamps for everything. But if Bitcoin goes down to 10 to 13K, both of y'all owe me 1,000 XRP. How about that?
I don't have to find. No, I'm not. I ain't doing that.
XRP's like 50 cents. That's like, how about that? Bucks, like,
how about both? No. Subjective to whatever price it is at the time that Bitcoin goes down there, y'all owe me 1,000 XRP each.
Well, I'll buy it right now. It's about $500, so.
Okay. So we go.
I am on his side. I am on his side though, for sure.
No, that's fine.
I don't think Bitcoin's going there. I definitely. At the very most, or the very least, I guess, I could see it maybe touching 20K, but like that's pushing it.
Okay, 20K was not even strong support, bro. That's the thing. You have to realize it broke out from 10,000. That was the breakout point. It went from 10.
No, it broke out. I thought the previous high was like.
Let me finish. Like it broke out from 10. It was at 20 for a little bit, but it went straight up to 28, and then broke out from 28 and went on to do whatever. But 10 to 13 was the stronger resistance. But if I'm right, I'm right, bro. That's all it is. If I'm not right, I'm not right. Like I said, everyone's entitled to their own opinion. I'm just looking at what I can see. That's all.
That's why we have this podcast, to just throw our opinions out there.
Pretty much. And if the haters disagree, I don't want to get a bunch of thumbs down videos. Okay.
The thumbs down button is disabled. Can't even see it. So thumbs down right away. We don't care.
Yep.
Yeah, facts.
Okay, well, I think that was a really good episode. I think we can close it off. Do you guys want to do some advice?
Always.
Okay, so my piece of advice, not financial advice, for this episode is going to be to really push yourself to learn new things. Because in this podcast, we talked about DeFi, and that's something that's very new to me. And, I have two very smart gentlemen here who, informed me a little bit, but DeFi is something that I think will be very interesting and I want to learn about. And, it has the potential to make me money, advance me, and make me more successful. So, but it's confusing, and there's a lot of information and there's a lot out there. So yeah, to reiterate my advice, just go after things that you're interested in learning about, even if they seem difficult, because you never know what will come from them. And yeah, that's my advice.
My advice is kind of like how we had this conversation that some of us differ in different opinions. It's very good to take on as much knowledge as you possibly can, and to basically listen as much as you can to when the other person is speaking, because you're able to pick up things that you may not have thought of. And like having Nick on, Nick has a lot of knowledge of the space, and hats off to him for coming on again. Really appreciate him. And Nick put a lot of things in perspective in a way that I couldn't have put it. And I said some things that I'll probably put it in a different way than he would put it, but still being able to put a bunch of knowledge out there in different ways, and you're able to dissect it and then make the most out of three different opinions with Paul as well. That'll probably be my advice for this, is that you can never get too much knowledge.
I like that.
And to end off, why are we in crypto? I didn't invest in crypto because of you. You didn't invest in crypto because of me. We have our own reasons. My reasons, probably yours. We want financial wealth, freedom, passive income, stability, leave our 9-to-5s, and all the above. That's what crypto can do for us. What coin? What crypto? We don't know. It's all about what you believe in and what your research is going to do. And it's all about where you want to put your money. There's essentially no bad market. For example, DeFi, metaverse, file tokens, proof of stake, proof of work is still relatively fine. It's all about what you believe. Stick to about 4 or 5 coins, take not financial advice, heavy position in those coins, do all the research in the world to give yourself that confidence to where when you are in a bear market, things are going down, you don't have the need to sell. I am solid as concrete because I know my plays are good. I understand what my money is being put into. I don't care about 40%, 50% retracement. It is irrelevant because my tokens in the very long term is going to give me what I need, which is why I listed passive income, financial freedom, wealth beyond anything else I could ever dream or acquire. No job, no school, no type of education can equate to the opportunity crypto can give me. So I give people the final saying of educate, be confident in your investment, and your research will back up that confidence.
Know what you hold. Know what you hold.
Yes.
What you hold.
All right. I liked all those. Thanks, guys. This was episode 12.
Wow.
Episode number 12 of the podcast. Leave any questions in the comments. You guys left some questions last time. Leave them again. Thank you, Crypto Moon Boy, for coming on here. Thanks, Nick.
Thank you. Thank you for having me. I appreciate that.
Make sure you go follow his channel, follow all his
Always.
socials.
Yep.
And thanks for watching.
Crypto Moon Boy to the moon.